Today, the president's Treasury Secretary, Scott Bessent, outlined an optimistic pitch for why investing in America is the move to make.
We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you.
For more on the administration and tariffs, Javier David joins us now. He's a CBS News business contributor and Dallas Morning News business editor. Javier, good to see you. I mean, we've heard the president say, kids, parents may have to do, with fewer toys, et cetera. This is perhaps the administration trying to shine this movement in a more positive light. On Sunday on Air Force One, the president said there could very well be trade deals announced this week. What do we know? How significant would this be?
Look, the president has been dealing with friendly allies like India and Japan, but the real heat and light is with the bilateral relationship with China, which I've said before, single biggest, most important bilateral trade relationship in the world. So just kind of to throw a few numbers out there at you, the top 5 purchasers of U.S. goods are Canada, Mexico, China, Japan, and the United Kingdom. So it's good that we're getting some movement with folks like China and Japan. Japan and India, rather. But, really what the market has been trading on and all of the volatility that we've seen has been surrounding China. That's what the market wants. They want to deal with China, not necessarily India or Japan.
So on that note, online marketplace Temu says that it will stop selling goods imported from China in the U.S. I mean, what does that mean, both for the company and for consumers?
Yeah, Temu and Shein are both very popular with cost-conscious U.S. buyers. They recently warned that they were going to hike prices in response to the tariffs. International retailers have been for years benefiting from something that's called a de minimis exemption. Anything below $800 exempts them from custom fees. It kind of helps them keep prices low. So the end result is if you're imposing 145% tariffs on things that are coming abroad, 2 things have to happen. Either you have to source your goods domestically, and Temu has indicated that they're going to do exactly that. They're just going to fulfill all of their orders from domestic supplies, but that won't last forever. At some point, they're going to have to ship in something from abroad. Temu and most of their supply is abroad in the mainland. So that's when the fun really begins, when they have to actually force themselves to bring things across the U.S. border, and all of the costs will apply to them. And that invariably means, unfortunately, that those costs will be passed along to their consumers.
Javier David, thank you.